Communications Manager at ICEA Life Assurance. Welcome to the show.
Thank you.
You're welcome. And next to her is Mr. Sunday Protasio. Yes. I got that right. Yes, Protasio. Sure. He is the AG Director, Market Research and Development from IRA, the Insurance Regulatory Authority. Welcome to the show.
Thank you.
You're welcome. I'll start with Madam Florence. You are in this particular space. You directly deal with clients. Our uptake is at 0.85%. What's the reason behind it?
Okay, I think one of the reasons is that the sector that is taking out insurance is mainly the formal sector, and yet the biggest chunk of the population is in the informal sector. So some of them, maybe they don't understand the products or they are not well reached. Those could be some of the reasons. When you look at most of the customers that are buying, they are in the corporate segment.
In the corporate segment. Mr. Sunday, would you agree with that?
Sure, but the good news is that when we look at the statistics, the life insurance business is actually peaking. And that gives us hope that moving forward, things are going to improve. The life insurance business, for instance, has been growing at over 25% per annum compared to the non-life, which has been growing at about 14–15%. And what is driving this is mainly the corporates, that people are picking up interest in insurance. People are getting concerned about education. In your preamble, you talked about education. The corporates are getting concerned about the education of their children. And we have also seen some enhanced uptake with individual, where I or Florence or you pay your own money. I mean, even people in the business world have started appreciating. So on our part and also the part of the players, I think, as Florence mentioned, we need to do a lot in terms of educating the people about the value, about what they need to do to take up insurance. Life insurance generally, but in very specific terms, insurance for education.
Okay.
Because education is becoming quite expensive.
Right, right. And the conversation has been, university, kind of fees continue to rise. But today in the papers, government is supposed to has plans to actually control fees in schools. But that's a developing story, of course. Sure. And maybe it could be a sigh of relief to many parents. Be sure to grab your copies of the Daily Monitor today. Madam Florence, just break it down for us. What is an education insurance policy, ideally? What is it?
All right, an education policy, it's a plan that a parent takes out. It's part of financial planning. You go to an insurance company and you take out a policy with an aim that in the future, this policy will be able to meet the needs of education for your children. What do you look at? You'll need to look at the tuition. You need to look at extracurricular activities that your child is taking part in, any other costs that may be incurred at that point. So when you take out an education plan, it's not a savings plan, it's a combination of an investment and a savings. So in the future, you're able now to benefit from this policy. The policy takes over, either in the event of early death or at maturity, the policy takes over and pays for your child for their education.
Okay, all right. And just let's do this practically. For example, take us through the cheapest plan that you have. If today I've made that decision that I want to secure the education of my children, whether I'm alive or not, God forbid, where do we start? What's the process? Because we have people watching and they really want to get onto it, especially them that, are parents of children who are school going.
Okay, the plan is, first of all, we'll need to do a needs assessment. How old is your child? Is your child 1 year? Are they 3? Are they 10? And most of the parents, they look at the most expensive stage of education, and usually it's from high school or university. So you'll take out a plan where you'll pay premium throughout that time, and you're able to receive your money at the point when your child is going to that most expensive level of education, which is usually university. So other than just looking at the age of your child, you need to look at the needs. What quality of education do you want your child to attend? I may want my child to go to Makerere, you may want your child to go to Cambridge. So our needs will be different. You'll definitely pay more premium than myself because you're targeting a higher tuition at that stage than myself. What are the extracurricular activities? These days schools have a number of extracurricular activities that are not in the tuition. You have piano classes, you have swimming. Almost every parent wants their kid to have a balanced kind of curriculum. So you'll also have to look at that and factor in all those fees. The good thing with life covers, once you're guaranteed a sum, even if the fees drops or whatever, the company will still pay you that amount that was guaranteed.
How so? How so? For example, just take us through, okay, what's the cheapest premium that I can pay per month? Just give me the cheapest plan that you have, for example, at ICA.
Okay, that's a tricky one. Well, our education plan at ICA is quite rich. So the minimum premium that one would require to pay per month is 100,000.
Okay.
Because the benefits are quite immense. Yeah.
Okay, so let's assume my child, I've just given birth. So I'm actually allowed to get into the policy even before I get children, so to speak. Can I?
Okay. When you're taking out a policy, you should have a purpose. So if you don't yet have children, you cannot take out an education policy.
But if you've adopted, I'm pregnant or something, and I know I have this child who has to go to education.
No. The child has to be named in the policy.
Okay.
So you have to first wait, have the child is named, and then you take out the policy.
All right.
Yeah, but even if you've adopted a child or you're looking after another child, you're responsible for them. The financial burden is on you, so you can as well take out a policy for them.
Okay, so we have this child, for example, months old, so to speak, and I come to you and I tell you I want to start saving up for this child's school fees. And for me, I'm not so specific. I want, for example, God forbid, if God takes me away, calls me home when this child is 1 year old, this child, quote unquote, will be secure. So I've started saving up for this policy when this child, maybe it's 2 months, yeah? And God forbid something happens and God calls me home when this child is 3 years old. Yeah, and for me, I wasn't so specific. I just wanted this child to get an education, whether I'm there or not. What are the implications? And maybe my premiums are just at 100K per month.
Okay, now this is what will happen. The plan that we have, once you've taken out the policy, the main cover for you is death. Once the parent dies, then the company has to take over education of the child. Now, we have what we call riders. Riders are policy additions other than death. So once you have died, God forbid, we'll pay, first of all, we give a contribution to your funeral, which is 15% of the sum assured. We have what we call the sum assured, meaning the sum you had set aside to cater for the university education. So we pay that 15% as soon as the parent dies, the burial is taken care of, and then from thereafter we waive your premium. Meaning, you the premium payer, you have died, but there is no one to pay the premium until maturity. Say you had taken a 15-year policy. The insurance company actually pays your premium until maturity. That's what we call waive of premium. Now, in between,
your premium?
Yes.
Yeah, sure.
Okay.
Now, in between, like the child educator policy we have, it's called total plan. Every year, your child gets 15% of your sum assured just to sustain them in school until that level, say university, where now the lump sum becomes payable. But now, like I said, our policy has, it's very rich. We don't pay out the lump sum because we've seen cases where you pay out the lump sum, someone is going to study, say, for 5 years at the university. Within year 2, there is nothing. So we actually phase the payment. Even at inception, you, the parent, you state it out that I want the money to be paid out over a space of 5 years. Maybe 3 times a year or 2 times a year, because that's how our academic system is. So once we get to that point, then the company will pay the money in those phases and to the institution. If the institution is charging less than what you had taken out, we now pay the balance to the family.
Okay.
Yeah.
All right. Mr. Sande, I'll bring you in on this one. And it's a good thing that actually once the parent is, called home, God forbid, then the insurance company actually is mandated to pay up the premiums until its maturity. But let's get to the issue where there now, there's friction between the client and the insurance companies. And we always know that with the insurance companies, and these are stories that you've been getting time and again, and please bring in your views. The hashtag is Morning at NTV, and you can also call in live and just give us your experiences and your questions with regards to education policies and insurance, life insurance at large. So that friction bit comes during claim. When you want to claim for your money, now there's friction. Does IRA look into this, especially for cases that have not been settled between the client and the insurance company? Where do you come in as a controller, as a regulator? Okay,
thank you very much. Before I answer that, I have heard you saying, God forbid. I wanted to emphasize that death is a must.
Right.
Actually, we don't even say if it happens, but we say when it happens, because it will surely happen. And I like this conversation because each one of us should really take responsibility. In the preamble, I was saying our colleague was talking to the ordinary person. People are saying that my brothers, my sisters take up the responsibility. We are moving away from that. Right. We are becoming more capitalistic, that since death is known that it will happen, there is no reason why I should transfer my responsibility to my brothers. They have their own responsibilities, and hence these education plans. Then two, you had said before you give birth, there are other life insurance plans which are not necessarily education. So even before you produce, you can have an endowment policy where you put your money, you save and they invest, and I mean the terms and conditions are more or less the same. It's a life policy. So you could start from there, and probably at 5 years when your child is born, you can convert it to an education policy. These people have flexible plans. Now, back to your question. The Insurance Regulatory Authority of Uganda is a neutral organ. I would start by saying that. Neutral in the sense that we don't have sides. We would not side with the insurance players, neither would we side with the policy holder. But we do the right thing. As you buy this policy, there are what we call terms and conditions. So what we look at are the terms and conditions to ensure that there is fairness. If the insurance company is saying they are not paying the claim, and we look at the terms and conditions and we realize that they are at fault, we have the mandate to ensure that they pay. But also for policyholders, if for instance you have entered into a 5-year policy, and the requirement is that you pay premiums monthly, you pay for the 5 months and you sit back, even after there are continuous reminders that you are not paying the premiums. Most of these policies have what they call grace period of say 30 days. So they remind you within 30 days and you're not doing anything about it. You're not providing any solution to it. Then the policy will lapse. And there is no way now the regulator will come and push these people to pay, because you have also not fulfilled the terms and conditions. Especially, you know, in the terms and conditions, there are different conditions. One is that you must pay premiums up to a certain period before they can pay you back anything, what they call surrender value. So if you have not reached the surrender value period, then the policy will lapse, and that's it.
Let me ask you a question, because that's where there's a bone of contention.
Exactly.
Maybe, I don't know, you will take it, Mr. Stanley, and also I'd like to hear what Florence has to say about this. We know life is hard, really.
Sure.
You can take up a policy and maybe months in, maybe your business doesn't do well, or you're laid off from work, you lose your job, and there's a policy lapse. Like you can't pay up, you know, efficiently and on time on your monthly, you know, kind of remissions. So when you say that there's going to be a policy lapse and on my side I would have failed, what then happens? All the money that I saved up till that point when I started having hassles and struggles, will I be given that money, or it's gone, never to be seen again?
Florence will come in. Again, terms and conditions. You know, when you pay this insurance premium, these people do not sit with all of it. One, the administration costs. Number two, some of them do reinsurance. In other words, you put money and it is distributed. Three, the insurer has long-term plans, because they have to pay you the sum assured plus all the accrued bonuses over time. What does that mean? That when you pay your money, they plan for this money on assumption that you are going to keep your policy alive up to 5 years or 10 years or whichever period that you have agreed. Now, that one introduces a challenge when 2-3 months into your policy, you fail to pick it up from there. Some policies have what they call reinstatement, and Florence will come in at that. There are provisions where you can fail to raise premium, but there is an allowance for you to reinstate it within an agreed period of time when things improve. So, what is my advice to you and the people watching? When this is your money, it's a long-term commitment. take your time. Look at the policy. We are working on the new regulations where we are going to require the insurance companies to append a key features statement highlighting the key aspects in the policy, because we realize that many people don't have time to read this fine print.
Yes.
But if if you have a one-pager highlighting the consequences of your failure to honor your obligations, one of them being timely remittance of premiums. These are the consequences. So that as you penned your signature on the policy, you are saying that they agree to these terms, they have read and understood, so that if it happens, even before you go to them, you really know that problem at fault,
right,
or they are at fault.
Okay, so Florence, I need your view on this, because this is where many people actually feel that maybe they're cheated. If there's a policy lapse, of course, on my premiums, what happens? Am I refunded back, or that money is lost and gone?
Okay, first of all, I would like to start by stating that life policies are long term, because usually you find that the purpose, if you look at education, there's no child who's going to study in 1 year and finish. They're going to study for 15, 20, 25 years. So even when you're buying a life plan, the company puts all that into consideration, and they're able to break down the premium in small chunks that you can actually afford. And many times, even when we're doing a needs assessment, we ask you, that's why we need details. How much do you earn? What are your expenses? We ask you very many questions so that we make sure the premium is affordable to you. And even when you talk about lapses, the main cause is not about someone losing a job. Most clients, either they forget or they don't put in place a mechanism to continue paying regularly. So what happens, like Sandy mentioned, companies have a grace period, usually it's 90 days, whereby if you have not paid premium within the 90 days, you're still on cover, meaning if you died, the company will still honor the claim. But if you go beyond the 90 days, then you're now off cover, because you're not taking part of your obligation. So what will happen is that the company will have a mechanism in the event that you want to come back and continue with your policy. Of course, it's at the discretion of the company. There are terms and conditions. If you have fallen off for a certain period, the company can allow you to reinstate your policy, subject to some requirements being met. That means it's not like you'll have lost your money, but you'll have a discussion on the items that you need to tick off before your policy is reinstated. In some cases, it may not actually be possible to reinstate your policy, because you may find either the outstanding is too much, or you've been away for so long and the company cannot be able to reinstate your policy.
But will the company refund me what I've already paid up for the period I paid up?
Okay, remember, when you're talking about insurance, it's not a refund. It's not like a bank account that I've saved my money and now I want it refunded to me. Once you get back on board, the terms and conditions of the policy will now apply, meaning at maturity or in the event of death, the company will pay you whatever is due to you. So in other words, you'll get back on cover and enjoy the benefits of your policy.
So the option is I just have to look at options of reinstating.
Yes.
But there's no option of getting my money back.
No. Okay. My colleague has whispered something about a surrender value. Now, there's what we call a surrender value. We don't encourage it because you don't really get the most out of your policy. The best way to benefit from your policies is to let it run up to maturity and pay all your premiums. However, if you've reached a point and you're really stuck and you cannot continue with the policy, but it has run for some time, usually 3 years and above, you've been paying your premiums faithfully and you want to opt out, then you can surrender the policy. And the company will be able to give you a compensation based on their formulas for surrender.
Formulas of surrender. So it's not, you're not going to get everything that you've been paying up till that 3 years. There's a calculation that happens right there.
Ideally, it's not a refund of premium, because remember, you've been on risk. While for you, you're still alive, there's someone who died in year 1 and we've had to pay out all these benefits. We've paid a funeral expense, we are paying every month, we've waived their premium. So for you, you're looking at only yourself, but remember the company is paying some other claims where people died so early you're meeting expenses plus all the other costs. So it would not be ideally a refund of premium. It would be a compensation for you terminating your policy early.
Okay. All right, okay. You can actually continue bringing in your views. We have Rita Kanya who has feedback from you on social media, but also you can call us live. The numbers will be on the screen in a few seconds time. But just to sample some of this particular feedback that we are getting from social media, Peter Sengeno, you're saying always there's always a higher risk of non-payment for clients. Benefits to the next of kin in case of death. There's lack of transparency from the insurer. That's what he's saying, the issue of transparency. He's saying when you guys are coming to woo us to get into these policies, you're all, you know, smiley and good, and most of them, we're not, of course, blaming the insurance companies, but the salespeople, they just tend to gravitate towards the benefits, and they're not, you know, honest and transparent with regards to the consequences. And if one thing doesn't happen, then these are the consequences. Just let us in on this one with regards to you responding to this particular view.
All right, let me comment on the issue of transparency at claims. Right now, we are in 2019, so most of the people who took out policies in 2008, 2009, policies are maturing now, and we are actually paying. It's just that when someone is receiving their money for claim, they are quiet about it. Even when you ask them, can we do a documentary, they're like, no, I don't want people to know that I have money. So people keep quiet about the success stories, but when there's a little complaint, it will go viral. It will go so viral, and yet the people who have received money, they're not talking. Well, they should be our ambassadors. Hey guys, I received my money, I've been saving for 10 years, I had a policy, I've gotten this amount of bonuses, but people are very secretive when it comes to that. There are also people where maybe the next of kin passed on and we have paid, sorry, the life assured passed on and we have paid the family. But they are so quiet, they're like relatives will come for the money. So it's not about us not paying, but the ambassadors are not loud about it.
Okay.
And maybe to add on that,
right,
insurers actually are paying, but like she said, when people are getting money, they don't want the public to know that they have gotten money. Save for a few people like me, if my policy is about to mature, and I think I will need to go public so that people know that insurers actually pay. Looking at our statistics, in the year 2017, close to 300 billion Uganda shillings was paid in claims, and there is evidence to that. So the transparency bit, you know, they say that a dissatisfied client will tell 100 others, but a satisfied one probably will tell none, and that's normal. It's a usual personal behavior. But where we are going to improve on the transparency, I talked of the key features statement. Before you take on the policy, you should read and understand. You should take time to ask. These agents, they have met me outside the IRA, and you know, they are talking to me as a member of the public. I always take time to ask questions because this is your money. If you're committing 100,000 shillings for 10 years, that is significant. If you're committing 1 million shillings for 5 years, I mean, that's your money. So it is very important that you ask and understand. And probably I wanted also to say that this is actually not unique with insurance. Even other financial services, I've seen people complain about loans because, I mean, you're rushing to put in a signature, but if you don't fulfill the terms and conditions, your house which you mortgaged will go.
Right.
So it's about really people taking their time to read the fine print, understand the terms and conditions, so that by the time they put their signature on paper, to seal the deal. Okay. They know the consequences.
All right, and of course we'll get to the other side. Now, you as a regulator, what are you doing to ensure that the rotten potato in this particular sack is actually, you know, regulated and faces the consequences? And this is regards to the insurance companies that actually don't do what is right. Oh. So right now, let me loop over to Rita Kanya, who has feedback from you. Rita.
Now, do know that the hashtag you can use is morning@NTV, and our social media platforms are Twitter and Facebook, and it's at NTV Uganda. Now, on Facebook, we have a number of messages coming through, and one of them is from Dut Garang, who says, yes. Now, for him, he is speaking in regards to what's happening in Garang and says, not today, he has not yet gotten one, but he goes and begs the question and says, as long as there's an authentic home, which is more peaceful for him, absolutely, starting and working on programs like that will be helpful. According to him, charity begins at home. And this this is when we ask our guests this morning, where does the insurance policy lie in regards to the security back home, maybe even just for Ugandans?
Okay, Rita, thank you so much for your views. Thank you so much for your views as the viewer. Be sure to call in. The numbers are right there on your screen. What have been your experiences, of course, with regards to insurance companies, you as a client, or if you've not even taken up any policy, why have you not done yet? Why have you not done that yet? So we need to get your views on this particular aspect. So, Mr. Sunday, let's get into regulating, of course, the players who, you know, cheat, so to speak, the clients. Them that we know, for example, we know of companies that have been, you know, blacklisted in the public domain. People know that that insurance company, don't even try it. So as a regulator, how often do you follow up with these insurance companies to ensure that they follow to the core every single rule and regulation that you have put up for the operations?
Okay, thank you. One, the regulator requires that each of the insurance companies keeps a claims register. Now, the idea here is we want to have a feel of what is happening on the claims side. If, for instance, we realize that a claim was reported, discussions have taken place, and a discharge voucher. A discharge voucher is usually an agreement between the client and the insurer on the amount. The discharge voucher has been signed, and it has taken so long for the money to move to the client. We have to investigate that. Mm-hmm. We need to understand why. Because what we have done, we've issued what we call claims guidelines, showing the periods, depending on the amounts that have to be paid. And for instance, if it's 5 million shillings, we don't see a reason why a company should take, 2 weeks once the discharge voucher has been signed. There is absolutely no reason. That said, we are going to issue very soon market conduct regulations. Now, market conduct regulations are basically supposed to regulate the relationship between the insurance players and the clients. Mm-hmm. And that's where we have the key features statement. We have repercussions for not adhering to the terms and conditions. We have provisions on the marketing documents. They should be simple, based on the expected knowledge of the policyholder. If they are marketing to a border cyclist downtown, the language should be different. It should be understandable compared to when they are marketing to you.
Right.
So we look at those marketing tools to establish whether they are fair, whether they are reasonable, whether they are clear. And like I said, the biggest challenge has been the level of understanding. What is it that I'm going into? Now, to answer your question directly, we have a complaints bureau. I can call it a small court, where if you feel you are not satisfied with what the insurance company is doing, probably they have declined paying your claim. And I'm saying declined. It's not actually a refusal in most cases. We bring both of you to the table. And we have our experts. They listen to both sides, and they give ruling. Our statistics show a normal distribution, right, that it's actually about 50-50. Sometimes the insurers have some small gaps. And you know, after discussion and whatever, they agree that indeed this one shall. But there are also cases which are outright fraud. We have actually established also an anti-fraud unit at the authority, because a lot of people have taken insurance companies as cash cows.
Exactly.
So for those ones who are watching us, probably we are also sending a warning that they are no longer cash cows. We have established cases where people have declared themselves dead,
right, to
get money from the insurance companies.
Okay.
And after thorough investigation, we realized that they're actually alive and somewhere hiding.
Okay, let's take in a call from our callers. Good morning, if you can hear me.
Good morning, how are you?
I'm fine, thank you. What's your name and where are you calling us from?
I'm calling from Paul Martin.
Okay.
I will find out whether Prudential is a registered insurance company. And then too, I have 5 years to retire. Can I join to education insurance?
Okay.
That's the question.
Thank you so much for your question. Of course, it will be answered directly by the experts here on the deck. Florence, you can take that one.
I didn't quite get his question very well.
He's saying that he'd like to get more information with regards to the education policy on a 5-year plan. Yeah.
All right, now we have education plans that range from 5 years upwards. You can take up to even 15 or 20 years. So if you would like more information, you can visit our offices and we'll be able to take him through that. But the plans, yes, are there. The minimum term actually is 5 years.
5 years.
Yes.
And he mentioned that it's 5 years to retire.
Exactly.
Now he's a high risk, and Florence knows that he's a very high risk. If you have 5 years to retire, looking at the life expectancy of Ugandans, he would be considered a very high risk, and therefore taking up a policy at that level may not be as rewarding as you, who is still very young. So what advice are we giving the people watching us? Immediately you start working. I mean, you take up a policy because the risk factor then will be low and the rewards will be very high. So 5 years, I really don't think that it will pay for an education policy, because even then children are almost finishing university.
But can he be taken up? And Florence, would you take him up?
Okay, I don't have his details. That's why I encouraged him to visit us. But we have what we call a maximum age at entry. If you're beyond a certain age, we may not be able to take you. But we also have to appreciate that there are people who start life late. You start a family late, he may have 5 years to retire, but he may have a child, say, in nursery, and he may be worried that, I may not have a source of income after 5 years, or I may not be able to.
All right.
So we may not be able to expound on his issue now, but we can find for him a solution.
Okay, so Mr. Mark, kindly visit their offices. Of course, you will get more help. Good morning. Good morning.
Good morning.
Good morning. What's your name and where are you calling us from?
I'm Juliet from Busia. I'm requesting that you clarify more on the maturity of the policy and what comes after the maturity.
Okay, thank you so much. Thank you so much for your question.
You're welcome.
Florence, I think you're the most appropriate one to take on that, and then Mr. Sunday will give us his views as well.
All right, thank you. Now, a maturity of the policy, ideally, it's the date you set for your policy to now, I wouldn't call it expire, because when it expires, then there's nothing payable. So if you've taken a 10-year term, at the 10th year is when you get your maturity. So if the policy pays out a lump sum, you will then have your lump sum paid. If the policy pays out periodically, you will now start having the periodical installments. What happens at maturity? As long as you've been honoring your obligation, the insurance company will pay you the sum assured that was guaranteed in the policy, plus the bonuses that have accrued on your policy over the years. So you will have a really rich package to take home.
All right.
Yeah.
And if, for example, I really don't want to take the lump sum, what plans are there, for example, moving forward?
All right. If you don't want to take the lump sum, we have so many options for you. You can transfer that money and start a savings plan. You can't buy an annuity. We do have annuities at ICA. You take your lump sum that has been accumulated and then you use it to now get a monthly salary for life. You can also, at maturity, some people are still young. If someone took a policy at 25, at 10 year, you're 35, you can still even take another policy. Maybe you have even younger children, you can always take another policy. So there are so many options.
Okay.
Yeah.
All right. Let's go back to that bit that is very important also for the viewer, the high-risk clientele. So you said someone who is close to retiring. We've talked about 5 years to retiring. What other clientele do you categorize as high risk?
The other area is the
Mr.
medical condition of the client. There are some premium amounts or some assureds where they will require to do a medical examination to you before they can sign you up. And the idea here is to know the likelihood that you will die in, say, 1 year, 5 years, or 10 years, or you live up to the end of the policy. Now, they use that as a rating factor. If somebody is very healthy medically, and there is a report to that effect, then probably the risk factor is low compared to somebody who is medically unfit, according to the medical practitioners. The other area probably would be, and Florence will come in that, the nature of employment you're involved in. If you have somebody who is working in a factory, a cement factory, he's a relatively higher risk than you, who is at NTV, or me, who is in office. If you are involved in forces, I don't know, maybe Florence will comment on that.
You're a high risk.
What kind of risk factor they are likely to assign to you?
Okay.
If you are in Southern Sudan deployed. So there are a number of considerations that they look at to assign a certain risk, and therefore agree on the premium that you are going to pay for a given sum assured.
Okay, okay. And we have another caller in line before Florence adds up to that particular point. Good morning. Good morning. Okay, we seem to have lost you. Please call back. The lines are displayed on your screen. Florence, you can respond.
All right. In addition, we look at a number of factors other than occupation and your medical history. We also do look at your pastimes. What do you do during your free time? Where do you travel? Some people may be traveling to some places that are marked as
danger zones.
Yeah, we do look at that. We also look at things like your weight and height. Are you obese? All those are factors to consider, as well as, of course, someone who is advanced in age.
And these are things that you actually, these are criteria, checklist for every single clientele that comes on board.
Yes, actually, when you look at the life proposal form, it's very elaborate. We need to pick a lot of information to be able to underwrite, what we call underwrite. It's a risk assessment. So you need to fill in the form truthfully and to the best of your knowledge. We also look at family history. You know that some conditions for you may be healthy at the moment, but some conditions are hereditary. You may have, say, hypertension in your family or diabetes. Those are all things we look at.
But let me ask you a question, Florence. Every single person ticks in, are you healthy? Yes. Do you have hypertension? No. So do you go the step further and subject them to actual tests in medical institutions, or it's just a matter of filling that form, and if I've said yes, I'm hypertensive, then you take the step further? At what point do you come in?
Actually, this is a very good question, and also I think it's a point of sensitization to the public. Insurance contracts are contracts of utmost good faith. Utmost good faith is one of the key principles of insurance. So if either party breaches that, the contract will be null and void. If a customer, for example, lies, even if it's not a life policy, it could be a motor policy, any other policy, you are supposed to speak the truth. There's even a declaration on the form that the information is true to the best of my knowledge. So if in the event that we discover you actually lied, we will not be able to honor the policy. You would rather tell the truth. We will not decline to take you on. We'll just charge you slightly more, but you know you're covered. But you know you're doing injustice to your family in the future if we discover that you actually lied and you did not tell us the truth. However, for some customers, if the sum assured is high, each company will have what we call a free cover limit. If your sum assured is beyond that limit, then the company will subject you to medical tests. Now that's when we'll go and measure your pressure, all those other nitty-gritties that you're asking me. Do we go an extra step? We don't do it for everyone. Right. We do it beyond a certain threshold. Okay. Yes.
All right. And going back to the consequences that insurance companies, will get to face, or actually do face, when they, do not measure up to the standards of operations. Just, give us a list of those consequences, so to speak. What exactly do you do to them? Because the public says that, maybe IRA does not crack the whip as hard as it should be. And that's why we have unscrupulous dealers in this particular space. So what exactly do you do? What are the consequences for these unscrupulous dealers?
Okay, the consequences are quite several. One, being reported to a regulator. No company would wish that to happen, because currently we issue licenses every year. And one of the things that we look at are the number of complaints that the insurance company has against it. And by the time we issue another license, like we have recently licensed them, we have to ensure that all these complaints have been resolved. So that's a very important checkpoint. But that aside, we have penalties, monetary fines. So if you have failed on a certain obligation, we direct you to meet it, but also pay a certain fine. Number three, which has not happened, but could happen, is we can suspend a license, or actually revoke. Suspending is you are not in business for a given period until you settle your obligations, so we give the timelines. But also we can revoke. Revoke is removing it completely and instruct you to clear all your outstanding obligations. Now, for these insurance companies, we have what we call security deposits, which are under our purview. They cannot withdraw this money until they have cleared all the obligations. And it's not small money. They have assets where we put liens on assets, meaning that they cannot sell these assets until they have cleared all the obligations. Now, where we are going, in the new law, the Insurance Act 2017, we have also provided for statutory management, whereby if the insurance company is not meeting its obligations, the regulator can appoint a statutory manager to take over its operations until everything has been put in order.
Okay.
So we have quite a number of measures in place to do that.
Someone would ask, for example, on the monetary consequences, paying up maybe the fines and stuff like that. Is that a whip enough? Is that a consequence enough? Why are we not seeing, or what you're saying is that the industry is pretty much safe and sane, such that you haven't prosecuted anyone so far?
Actually, it is only that many of these things happen and they end. Whether the monetary consequences are punitive enough, if a company is fined 100 million shillings, I mean, this is something that you could avoid. Probably it's a claim of, say, 10 million, but you're going to pay 100 million, and then we publicize you. There is no company that will need to go to that level. And what I can assure the public is that for whatever complaint that has been reported to us, we've provided a remedy. When there is a disagreement at the regulator, there is another level, which is court. And the courts are open for every Ugandan. But very few have opted for court.
Okay.
Yeah, sure.
All right. And as we come to a close, of course, there's this particular aspect that I'd like to bring the two of you in, and this is the aspect of, insurance agencies. For example, ICA, Lion, you have an agent who can actually sell your packages, so to speak. What is your relationship with them to ensure that they actually don't dupe the clientele, so to speak? What are the regulations and the controls that you've put in place to ensure that your relationship and that of the client is actually, safeguarded before we come to the regulator himself?
All right. Now, when we onboard the agents, we take them through an intense training. Even before we go to products, we start with market conduct. How do you conduct yourself? What are the duties of an agent? Now, all agents are also required to do a certificate of proficiency with the Insurance Institute of Uganda. Now, that kind of boosts their knowledge in terms of regulation and product knowledge. Then after that, we take them through product training, getting to know our products. Now, other than that, all our documentation will bear our contacts. So we expect that clients will call us back. We also put acknowledgement when we are sending out documentation to clients. We ask for acknowledgement from the client, so we are able to contact them later and confirm that they've understood the terms of the policy, they've received their policy document as required by the law, and also advise them on premium payment as well.
So you actually keep in touch with the client directly?
Yes, we do. And as well as when it comes to premium payment, we also advise them to pay directly to the company, and we give them several methods of payment.
Okay.
Yeah.
All right. As the regulator, how do you ensure that, because the only worry and the fear in the public, them that have been duped thanks to this agent. So what is the regulator doing to ensure that these agents are actually controlled and regulated? Before we go to the safe aspects or the tips that the public can look out for before they buy any kind of program or any policy from an agent.
Okay, just like the insurance companies, the agents are licensed, and the licensing process goes through a number of checks. One of them being that they must have the training, the required training, because if you are selling insurance, you need to be knowledgeable. So they need to get proof that they have that competence. She talked of COP, that's a certificate of proficiency, which is issued by another very critical institution, that is the Insurance Institute of Uganda, in addition to their in-house trainings that they conduct. Now, the obligation really of an agent, again, lies on the principal, which is the insurance company, because we talk of the principal-agent relationship here. If the agent has duped the client, then whatever he's doing it on behalf of the principal, who is the insurance company.
Right.
So we shall require that the insurance company takes up the responsibility. So it is in the interest of the insurance companies to ensure that they have mechanisms to monitor their agents, because whatever they do, if it's a positive, it is their advantage. If it's a negative, then they have to bear the consequences. Yeah, sure.
Okay, and just for the public, and Florence, I'll let you in on this one together with Mr. Sunday as we come to a close. I've made that decision that I want to get an insurance policy. Now that the conversation is on education policies, I've made that decision. And I want to go through an agent, maybe because of convenience, and maybe I'm in a rural area and that's the only person that I can, you know, get in contact with. What are the telltale signs, or what should I look out for to tell between an authentic agent and a fake? Mrs. Florence.
All right. I think that, of course, agents are in very many different forms, and also when you look at the agency forces in many companies, they are very, very big, and people differ in terms of integrity. Some things are so hard to measure. You'll train someone, but you can't know what their level of integrity is. But I think for you as a customer, it's very important, first of all, that you find out about the company even before if the agent has come and they're from ICA, you read about ICA, where are their offices, what are their phone contacts. You can as well go a step further and call them to confirm if they have an agent called so and so. But also, if you realize that an agent is never open or giving you documents, then that is a telltale sign. When you pay money, you have to get a receipt. You have to receive your policy document. We have regulations now that require us to issue documentation within 5 days. You have to make sure you have your document early. The agent should be transparent. If they are hiding a lot of information, then you also have to hold back and maybe contact the company directly. But if an agent is sharing information, delivering the documentation, everything, then most likely they are genuine.
Okay. Speaking of receipts, should it be handwritten receipt or printed out receipt? Because we always have that conversation, and it's not just in the insurance sector, but across every single industry. So how should the receipts look like, handwritten or printed?
Okay. I think practice varies from company to company, but most companies do both. Like at ICA, actually, as soon as we receive your money, you'll get a text message on your phone.
Okay.
And then it will be followed by an actual receipt. And then on a quarterly basis, you'll be getting a statement showing you the premiums you have paid. Now, if you're paying, say, by direct debit and your installment is not picked, maybe you didn't have enough money, you'll still get a message showing you that we are not able to collect your money this month. Please arrange to remit it.
Okay.
Yeah.
So communication is free and open.
Yes.
And so, you know, on point. Yes. Okay, Mr. Sunday, telltale signs.
One, we have a database of all the insurance agents licensed in Uganda. But that one will require that you have access to internet. But secondly, each of the insurance agents has a license. So if you are in doubt, probably you could ask for a copy of their license, in addition to what my colleague has mentioned. But three, you can also assess the level of knowledge. If, for instance, you know that there is an insurance regulatory authority of Uganda and you ask who is the regulator, and probably they talk of NTV. It raises doubts.
Okay.
Then for most agents' offices, when you visit an agency office, on the wall we require that they hang the authority licenses in a place that is visible. So that you know that this is an authentic company, it has been licensed. But like she said, you can also access the insurance company. But a point of caution, avoid paying premiums directly to the agents.
Do it directly to the main
insurance
company. Okay, all right. Thank you so much, Mr. Sunday Protazio, the AG Director, Market Research and Development at IRA, the Insurance Regulatory Authority, and Ms. Florence Nabachivi. She is the Life and Pensions Manager at ICA Life Assurance. Thank you so much for them that called in, for them that gave their views on #Morning@NTV. Be sure to contact us and to be part of our conversations tomorrow, same time, 6:30 to 9 a.m. Have a blessed day.
Watching Morning at NTV.